tell us what the street is watching out for this time. Ekta.
Well, the street is not going to be too optimistic in terms of asset quality when it comes to Punjab National Bank. But the stock has already lost over 30% on a year-to-date basis. Now, just to recap what they did last quarter to give you a sense in terms of how this quarter could pan out, for Q3, they had a profit or rather loss before tax of around 850 odd crores. There was a huge tax write-back which then resulted in a meager profit of around 50 odd crores in the previous quarter. They had gross NPLs which surged around 200 basis points Q-on-Q, slippages which rose to around 13,400 crores plus, with 5,500 crores from the asset quality review. And the management said around 55% of the AQR has been completed in the previous quarter. So for this quarter, the street is estimating that 45% of the remaining asset quality review will in fact be factored in this quarter, and hence the gross NPLs might rise further. In terms of the bottom line as well, the street will be watching out for any sort of stability in terms of provisions, which would result in any sort of stability in the bottom line for Punjab National Bank. Like I mentioned, there was that loss before tax which took place at around 850 odd crores in the previous quarter. So overall, yes, the street is anticipating further worsening in terms of asset quality, but the extent of worsening will determine how exactly the stock will perform.
Okay, Ekta, thanks so much for that.